The S&P 500 and NASDAQ hitting all-time highs earlier today and tracking for a positive week. Joining me now with his outlook for stocks, JPMorgan Asset Management global market strategist Jordan Jackson. Jordan, thank you for being here. So it seems like you are not expecting a recession over the next 12 months. What are some of the headwinds that could derail that expectation?
Well, I think the market is fairly sanguine over the very, very near term, right? We've got potential reciprocal tariffs being put on place on August 1st. That would mark a meaningful increase in the average effective tariff rate. We're currently sitting at about 15%. If those tariff rates are put into place on August 1st, that would raise that number to around 22%. So a pretty big jump, not close to the 30% that was roughly announced on April 2nd, but pretty darn close. There's also August 12th that we need to be mindful of as well, and that's when trade negotiations with China are supposed to largely be announced, and I haven't really heard much development in regards to that. So markets do appear to be, as we flirt with all-time highs, sort of sanguine over the very, very near term. But that being said, as you've highlighted, I would say over the next 12 months, I think markets are going to be higher than where they are today, probably meaningfully so.
We're concluding our first full week of earnings for the second quarter, and they came in above expectations, but a lot of the big names did move lower on the results, perhaps because they had moved so much heading into the print. So it's kind of a sell the news and valuation concern. How do you think that portends the rest of the earnings season, particularly as we look ahead to tech earnings beginning next week?
Sure. So I think the word I would describe for the earnings backdrop is resilient. Companies sort of came into this period of certainty, really did a lot of cost-cutting measures, whether it be reducing workforce or putting freezes on hiring, really working with their suppliers to sort of try to either bear the brunt or have some of their foreign suppliers bear the brunt of higher tariffs. And so I think when you look at the broader backdrop, you've got to look at resiliency in some of the earnings. And I think we'll see that in some of the tech earnings that we get over the course of next week. The question will be is sort of forward guidance. What are they signaling over the next couple of quarters? We continue to hear more of a cautious tone from CEOs with the expectation that the economy is going to begin to slow over the second half of this year. So it'll be interesting to see what kind of forward guidance we get that informs our earnings expectations for the tail end of this year.